What is up, team? We have to start paying attention this week. This is going to be one of the most volatile weeks in the market that we've seen in months. The reason why, we have two major news events that we're going to cover on this episode: NVIDIA and the non-farm payroll report announcement, as well as we're going to be covering two trades and how we take advantage of these announcements this week. So I'm Chris Blom. This is Blomonomics. If you're watching this, you're officially a Blomonom economist. This is a no BS, no hype channel where we actually give you the information for free that you need to trade smarter in these markets. The only thing I ask, and I'm going to take a 2-second pause here, is that you hit that subscribe button. 1, 2. Okay, let's get into it. The first thing we need is a lay of the land. We've been talking about this in my last videos or episodes. 2 weeks ago, this is the SPX. We have the NASDAQ here, the weekly charts. They're both showing very similar things. We had this massive red bearish candle 2 weeks ago. Since then, last week, we didn't break below that candle and we didn't break above that candle. Once we do, that is going to set the structure for what direction the market is going to go next. So what we've been doing is chopping sideways last week, and we're looking to either break above this, will the rally continue on, or break below this, and will there be somewhat of a downturn? And right now the gold line is the 10-day moving average. We'd likely drop to the 20-day moving average, down here to the silver if we did drop. So what are these two big news announcements? Number one, NVIDIA. NVIDIA is the AI engine of the entire stock market. When NVIDIA pumps, the NASDAQ pumps. When NVIDIA misses expectations, tech usually sells off. All the other Mag 7 stocks this quarter have already reported their earnings. Microsoft was good. Google was good. Amazon was good. Meta was actually quite strong, but they had a one-time tax payment that spooked investors and had a 15% sell-off in that week, which I think is a really good position to enter. Sidebar. So, NVIDIA's announcement is going to drastically affect what the direction the market is going to go. If it is strong and investors have kind of priced it into perfection, we could see the market rally hard. In tomorrow's episode, if you subscribe and stick around, we're going to actually cover the income statement, the balance sheet, and the cash flow. I'm going to break this down into the only 7 numbers that you need to care about, and I'm going to teach you in under 6 minutes how to read these sheets so that you don't have to rely on YouTubers or news announcements, that you as a trader will be able to confidently go in, read the financials and understand whether or not their earnings were good, and understand where the stock's at right now, or when you assess any other stock, how to tell if it's a good buy, and you can kind of use that data as a foundation for yourself. So, NVIDIA earnings happening Wednesday night. On Thursday morning, we have the non-farm payroll report. What the non-farm payroll report is essentially, it shows the growth, the net growth of jobs in the US market. This is a 1-year chart right here. We can go back to a 3-year chart. A healthy market, a healthy economy is growing by about 150,000 to 250,000 jobs per month in the US. So, 400,000 here, this outlier 400, but on average 200, 227, 257, 148. Healthy economy, growing economy. This is what the expectation is of the market. If you look over here, in the last 4 months, May, June, July, August, we have had really, really low reports. So we can actually zoom in here. We were negative in June, minus 13,000 jobs, 79,000, 22,000. So we're going to see September's report. Why are we seeing September's report, but it's already November? The government got shut down on October 1st. This report gets released the first Friday of every month. So in October, the first Friday of October, they never released September's report. On the first Friday of November, they never released October's report. So the market's been flying blind for the last 2 months. We haven't had this data. Why is this data important? Because this data directly affects what the Fed is going to do with the next interest rate cut or hold, and they have a meeting on December 10th. So right now, this is showing a weakening economy. That's not necessarily bad for the markets. It's a little counterintuitive. And I'm going to show you why and tie this into interest rates right now. So on December 10th, we have the next Fed meeting, and the market has priced in that there's a 44% chance that the Fed is going to cut rates on that meeting in December 10th. 2 weeks ago, this was 80%. Yesterday, this was 52%. Now the market thinks it's 44%. That's bearish for the market. That's why you've seen a lot of sell-offs in the last couple of weeks. The market doesn't know, or they're uncertain if the Fed is going to lower interest rates. Lower interest rates are bullish for the market because they create more money supply. It makes debt cheaper to borrow. It makes money cheaper to borrow, and you typically see that money borrowed and pumped into the markets, and equities and stocks go up in value. Gold, silver goes up in value. So we want this to be, well, if you want the market to be bullish, you'd want to see this percentage higher. So the market's pricing in the fact that we won't be dropping interest rates. So if the jobs report comes back bad on Thursday morning for September, the data we haven't seen for a few months, that could be good for the markets because it might be a stimulus that the Fed would now have to drop interest rates to stimulate the job market. But the truth is, if it's too bad, then the market might take that information and say, well, the market's definitely headed into a recession here. It doesn't matter if the Fed's going to drop interest rates. We want to pull our money out of the markets and avoid this recession, or start to bulletproof our portfolios for this recession. So the takeaway here is it doesn't matter if the data is too good or too bad or slightly good or slightly bad. We have no idea how the market's going to digest this information, which is amazing for us because it sets us up a perfect trade, an options trade that I'm going to cover at the end of this episode. So in summary, NVIDIA earnings are going to drastically affect what direction the market goes. Regardless of the NFP report announcement and what the numbers are, we're uncertain about how the market's going to digest that report. So let's tie this back into how we're going to make a ton of money off this. So we're going to first start at a Bitcoin trade that I covered in detail in yesterday's episode. If you haven't watched it, go watch it because it's quite a complex trade. I'd say it's a very intermediate trade that you need to follow along with all the indicators I'm using. Long story short, there is in the daily chart a very, very strong Elliott wave forming. Elliott wave theory essentially says when you have three big waves in one direction, so these 5 points, the three big waves, the 1, the 3, and the 5, that there's a reversal, a buyer side or an investor psychology reversal that tends to pump the stock back in the opposite direction. So we've been on a downtrend here since October with Bitcoin. We've been down 25%. So if this is likely to, with investor psychology, pump the other way. You've already seen in the last 2 days here it start to creep up. Now, typically on weekends, because the market's not moving, Bitcoin tends to not move. So in the next day, it doesn't really matter what happens today and tomorrow. But when the market opens on Monday, I would expect this to actually start to pull up a little bit. Okay, so what is our trade? If the market's going to pull up, this is what I think is going to happen, but we have to wait for it to play out. But this is the speculation that it will come up, create a wave, and start to dip back down. How do we trade this? There's a tool called the fib retracement tool. What this does is the fib retracement essentially showing us that the Fibonacci is showing us mathematical exhaustion points in the market. You had a bunch of analysts look at the market for the last 50 years. They say, okay, there's these exhaustion points, but now that these have become indicators, they're almost self-fulfilling at this point because hedge funds are looking at this, the banks are looking at this, and retail investors are looking at these data points. So once you're in the know, you're going to be able to see things in these charts that novice investors just can't see. So for example, I'll cover this trade in detail tomorrow. I covered it in my last episode. I'm so excited that we're going to have to do it again tomorrow. But long story short is if we see a wave appear and dip back down in this Blom Economist gold bar, that is our buy zone. We want to see it come up and dip back down and retest. And our hypothesis is that it's going to launch back up now, that there's going to be a reversal in the pattern. And then what you're seeing here are two exhaustion points that traders, banks, hedge funds are all looking at. So we would take profits at the first exhaustion point, probably 75% of our profits off the board, put a stop loss in, and then ride the rest of our trade up to see if we can hit the 2.618. So that is the Bitcoin trade. Long story short is that right now, Bitcoin is dropping. It's dropped a ton. How can I not get rid of this? Every episode this happens. Bitcoin has dropped a ton. Just clean this up. and we could see it rally hard, especially if NVIDIA's earnings are good. It will rally hard. Like, we are going to see Bitcoin pump. And so we're going to take advantage of that trade if it comes into formation. We're not going to be premature on this. The second trade, which is based on that NFP announcement, we don't know what direction the market's going to go. It could go up, it could go down. NVIDIA earnings could be good, they might be a miss. So we do know that we don't know. And this is exactly why this is perfect for us to trade. So there is an option strategy called a straddle or a strangle. And you're essentially betting on that the market is going to move up or down in one direction sharply. So you're betting on volatility. Rather than buying NVIDIA call options or put options, because it's around the NVIDIA earnings, premiums are so expensive, we're going to buy D-Wave Quantum Computing, QBTS is the ticker, stock or options. Why QBTS? This is a quantum stock. It's a speculative tech stock. They don't really have earnings right now. It is all speculation that quantum computing is going to become widely adopted, and the stock has been pumping and dumping and pumping and dumping over the course of the last couple months, as you can see here. It is not uncommon for the stock to pump. This week it pumped 65% there. It's dumped in the last 10 days, 42%. It is not uncommon to see 50% moves in one direction or the other on the stock, and it's just highly sensitive to the direction the market's going. When we had that, the NASDAQ was down a couple percent in the last week, QUBTs was down 40%. It's just hypersensitive to the direction the market's going. So how you play a strangle options trade, and I'm going to actually go over this in detail tomorrow in another video, is that we're going to place a bet that the stock is going to go up past $28 or drop below $18 at some point in the next 2 weeks. If it does that at some point in the next 2 weeks, we're in profit. If it doesn't go above or below these two blue lines, we lose all our money. That is the risk we incur. But based on the fact that this stock is moving 50% on any given week without major news announcements, I'm quite confident we're going to see this spike up or down this next week. What does this trade actually look like on paper? I tried to map it out for you. It's quite confusing. But essentially, we're going to make a trade or a bet that it's going to go either 15% above its current price or 15% below its current price when we see it move 50% in any given week. To make this trade, you have to buy two options. You have to buy a call option at $27, which costs 84 cents a share, but you have to buy it on 100 shares, which means you have to pay $84 for this option. You have to buy a put option on a $20 strike price at 58 cents a share, meaning you have to pay $58. So you have to pay $1.42 per share to buy this trade, which will cost you $142 for this contract. If the stock doesn't move in the next 2 weeks, highly unlikely, you will lose $142. If the stock goes above or below these blue lines, you are trading as if you have the power of 100 stocks. You're essentially holding the option to buy or sell 100 stocks. So if it goes even $1 above this blue line, you make $100. If it goes $5 above this blue line, you make $500. So if we can get it to $33, or if it comes down to $12 here in the next couple weeks, you make $500, and it costs you $142 to make the trade. So you can earn 200 or 300% of your trade value on this trade. Now, I am not a financial advisor. This is not financial advice. This is for entertainment purposes only. But tomorrow I will break down in detail exactly how you would enter this trade if you wanted to entertain this on Monday morning when the markets open, as well as I'll break down in further detail again this Bitcoin trade, as these trades are massive and super exciting for me. So in summary of this episode, NVIDIA earnings could break the market or have the market rally hard. NFP report, we've been flying blind with no data for the last 2 months. We're finally going to see it. Who knows what that's going to do to the market? If the market starts to shape up bullish, we're going to take this trade on Bitcoin here especially if the earnings are good with NVIDIA, and we're going to ride Bitcoin up because I have a feeling that it is going to pump hard when NVIDIA pumps hard. If not, we're going to do the strangle options trade, where we're going to take advantage of volatility in the market, either one way or the other. We don't even have to be right. It just has to go one way or the other in the next 2 weeks, and we can make 100, 200, 300% of our money. That is my conviction. So we'll cover those trades. Tomorrow I'll make a video about that when I have time, as well as I'll make a quick 10-minute video tomorrow on, we'll call it the Blom 7, the seven numbers that matter to you when reading these sheets, that will teach you everything you need to know to basically be your own internal accountant, to understand if the business is healthy or not, if the earnings are good or not. So if you come to Google Finance like this and you have your own watch list of your own stocks, you'll be able to take a look and just see whether or not you think that company is in good standing and whether it's worth your money to invest in it. Thanks for watching. The only ask I have is my content is free for you, is that you slam that subscribe button. You keep coming back for more. For entertainment purposes only, we're going to make a ton of hypothetical money in the markets. And the last announcement I had that I've said in my last few videos is I'm giving away a 1 ounce silver maple coin to a subscriber once we hit 25 subs. I believe we're at 18 right now. My channel is brand new, so as soon as we get 7 more subs, we're going to do a silver ounce giveaway. That thing's worth about $52 US. The more I think about it, the more the logistics don't make sense, because maybe I'll mail it to someone who's in Canada or the US, and if not, if you're elsewhere in the world, I might just have to send you some crypto or something, because it's probably not even worth it to mail something like that across the planet. But we'll figure it out. We're going to do a giveaway here. 7 more subs. Slam that sub button. Tune in tomorrow. We have these trades coming up. This next week is going to be insane. Let's go get it.